Thank you, everyone, for joining us today. We're going to give about 1 to 2 minutes to let everyone get settled before we get started here. Alrighty. Welcome, agents. We're excited to have you here with us today. Today, we are joined by Ryan Long, President of National Gold Consultants. With almost 20 years of experience in the investment industry, Ryan embodies the very essence of a family legacy, carrying forward a tradition of excellence and integrity. Ryan has assisted countless advisors in securing their financial futures of their clients by harnessing the power of gold and silver. Having facilitated the transition of hundreds of millions of assets into these precious metals, Ryan's impact reverberates through this industry. National Gold Consultants distinguishes itself as one of the few licensed, regulated, and bonded wholesale companies in the nation, offering gold and silver solutions through an extensive advisor network. With that, Ryan, I will let you take it from here.
Excellent. Thank you, Emmy. I appreciate you. I appreciate NFI for putting this on again today. I know I keep saying this every webinar we do. I always begin with it couldn't be more timely. And what I mean by timely, everybody, is when we're talking about physical precious metals, your clients are asking for it. Your clients are looking for it, whether they're asking you or not. It's one of those things you hate to hear a client tell you that, hey, they just got this insurance or this annuity from somebody else, and it's like, why didn't you ask me, right? That's where this is coming from right now, and the timeliness that we have. And speaking of timeliness, I like to begin these webinars with this. I paint this kind of picture, this platter on the dinner table, and I call it these 10 economic storms. And I could spend the next hour on all these 10, but I won't. I'm going to keep this quick. I'm going to keep this moving because I know we have a lot vying for our time. So I do thank you all for attending this today. I will say at the end, we will end with a little Q&A and a call to action. I mean, this is all going to be, all informative as far as how precious metals work inside of a portfolio, how you as an advisor can bring this up to your client, how you can get paid for it, how you don't need any extra licensing for this. That's why we work with over 1,500 financial advisors and insurance agents all across the nation. But before I go into, those details, I just want to paint this platter here for you of these 10 economic storms that we're in. This slide, other than adding in Israel here this last year, I haven't changed this much. These economic storms have been there for quite some time. The biggest thing is that we're seeing right now, that inflation, the inflation side of things that your clients are dealing with, that you're dealing with personally. When we look at the concept and the premise of gold and silver, we always like to say gold and silver is going to go to where it needs to go to keep up with your current purchasing power. So talking about the timely things and the timely things your clients are hearing right now, gold and silver is all over the headlines, all over the news because of these 10 economic storms. Okay. So when you see these all over the news and you see gold hitting all-time highs, you start to see silver, year to date, it's up nearly 40% right now. This is again, one of those timely things that you need to have and equip yourself the knowledge to be able to have an education to bring this up to your clients so they can go through you instead of going elsewhere. Look in these 10 economic storms. Like I said, I could go on for forever, but this is what all the talking heads are all talking about. So when I move forward into what we're going to talk about, what does this mean for you? Well, I like to say, in 2024, we're marketing for new clients, we're servicing existing clients, and when we're doing that, there's a lot of uncertainty of where we go from here. How clients are going to pay the bills, how you pay the bills, how you're going to spend your marketing money. So when we utilize physical gold and silver as another additional asset class you can add to your clients, we're not talking about a substitution for what you're already doing. I mean, if you're already selling annuities, this is a perfect hand in glove fit for your current client base. They are already looking at a fixed product. They're already looking at taking risk off of the table. Gold and silver is just an additional add on to what you're already doing, not a substitution. Okay. So whether you are insurance only, or maybe you're an RIA or an IAR, this is another arrow in your quiver that you can add to your existing client base to not only, create another revenue stream for you. To me personally, as an advisor, the revenue stream is great. It's there. It's a secondary thing. It's not a get rich quick scheme. But for me, as a fiduciary, we need to look at this as making sure your clients do not go off themselves to tend to the markets of gold and silver. Gold and silver by itself is a completely unregulated asset class. Very, wild west mentality. I like to say, if a client calls one of the talking heads on TV that advertise gold and silver and they go, "Hey, I want to spend this $100,000. It's a fast way to turn that $100,000 into $50,000. So not only, I like to get this out of the way, we get paid for it to add physical gold and silver, but to me, it's that big fiduciary role, making sure your clients know you have a resource for this. Because guess what? If your established clients, if they have not already been presented gold and silver to you, you've already gone through their whole planning for them, they're not going to ask you about it because they don't think you can do it. Right. I always like to say you don't want a plumber to do open heart surgery. You want to go straight to the surgeon. And in this case, if your clients don't know you have a resource for this, they're going to go elsewhere. And that's what we're trying. You don't want to miss out and don't want to get, miss out on your compensation. To me, again, that's a secondary thing. We want to make sure we're fiduciaries in regards to, I like to interchange fiduciary for integrity for your clients. Okay. So I like to get that out of the way. Hey, yeah, we get paid for it. You don't need any extra licensing for this. We have a tried and true formula of a one-size-fits-all approach. Non-qualified, your clients are going to have physical possession. Qualified, it's going to be stored for them in a trust custodian as well. Okay, so I'm getting that out of the way. I like to debunk. I mentioned physical for non-qualified. I want to say why we only utilize physical metal for non-qualified and qualified, and not using ETFs. Now, when we look at an ETF market. ETFs, your common traded symbols, GLD, SLV. If you look deep down into the prospectuses of these funds, which I've read the few hundred pages of these prospectuses, to spare you the detail, these are highly leveraged. A lot of the times, the gold and silver that are in these funds are leased out, and when you're buying these funds. To debunk this, you're not buying anything physical. A lot of these times they're leveraged out 3, maybe possibly sometimes 400 to 1. If you're looking at the fractional reserve banking system, you deposit your dollar into Wells Fargo, they're able to loan that dollar out 15 times. Okay, that's how leveraged the banks are. Now imagine what 300 times to 1 does. This is not one of those physical metal type mentalities. On top of that, being highly leveraged, it's highly volatile. It's going to follow, the spot price up and down accordingly. In that case, you're looking at short-term speculation for an ETF, not what we try to solve. You'll hear me use the terminology. Gold and silver is wealth insurance, not an investment. Okay, when I say not an investment, well, I mentioned this earlier. Gold and silver is going to go to where it needs to go to keep up with current purchasing power. When we're right now adding $100 trillion of debt every 100 days to our national deficit, well, there's no secret why gold and silver continue to rise the way it's supposed to do. Okay, so why we use physical? It's the old proverb: possession is 9/10 of the law. The example I use is if I'm actually from Florida. I'm in our Minnesota office right now. But if I head down to Miami, board a cruise ship, and my wife comes with me, and it happens to be the Titanic. Well, we know the history of the Titanic. We know what's going to happen. So as we board the cruise ship, the crew member shakes our hand and says, "Hey, Ryan, I've got 2 options for you. The first one is the actual life preserver you can put around your neck right now, or we can give you a certificate saying you own a life preserver. Which one would you like?" And I bring that up, when I do these client webinars, client examples in person as well. Usually I get a chuckle or two for that, but it's the old proverb: if you don't own it, if you don't have physical possession of it, you don't own it, right? Possession is being 9/10 of the law, and that's what's important here. So looking at my organization, this is the actual building I'm standing in right now. Emmy made mention in the beginning a little bit of carrying on a family legacy. I've been doing this for 20 plus years now. My father was 30 years before me. We started originally in the retail space. And in the retail space we had a large call center. We had individuals calling consumers and facilitating gold and silver retail transactions. The biggest objection we always had was, I got to talk to this all sounds great, but I have to talk to my financial advisor. And that financial advisor, typically it's the held captive. I'm going to say like a Edward Jones type of a guy that can't market physical gold and silver because behind the scenes they're not allowed to. So what that financial advisor says, that sounds good, Mr. Mrs. Client, but I've got an ETF here that'll do just the same for you. Well, they don't want their advisors to sell away. The client then goes, well, okay, or that just doesn't make sense, and they move on. That's where that light bulb kicked on. So roughly about 15 years ago is when we exclusively started working with financial advisors. I'm an advisor myself, that now we have a network of over 1,500 advisors all across the country that utilize our services. So when we look at a time-tested process, the 10 economic storms that I've given you, interchange one or two in the next decade, they're still going to be there. When we look at the physical product that we're going to be advising you and we give you the education to do so, all we're talking about is one silver coin and one gold coin. That's it. There's no variances. Gold is gold. Silver is silver. We debunk why we don't get into bars, why we don't get into collectibles. We're not looking at this as a hobby. We're looking at this as wealth insurance. So as National Gold Consultants, we call ourselves a glorified IMO, but for gold and silver. We're there in the trenches for you to help market for you, to hop on three-way calls for you. We're all advisors ourselves, so we know what it takes to help you bring this to your clients. So we partner with you as advisors. Okay. Using this story of National Gold Consultants, of how you're able to have a resource to a nationwide wholesaler, that's not only going to give your client the best value, integrity, real products, et cetera. This is a very much so a lure to your clients. It's attractive. Clients already trust you. They've already put your trust in you. So this transaction, this process is realistically an 8 to 10 minute conversation with clients. It's super attractive, but not only is it attractive to your existing clients, it's attractive to your prospects. We get stories on the regular that, an advisor has a client. They did this. They did this add-on sale of physical gold and silver to their existing clients, and their clients then refer their friends and family to that advisor because it's a time and trusted process. The biggest issue clients have when they're going around their advisor and looking into metal is they don't want to feel stupid. They don't want to feel like they made a mistake. And when they can recommend their friends and family to this, because it is attractive, because they're all talking at the dinner table about those 10 economic storms, this is a great lure and attractive things to obviously create new clients and prospects inside of here. So I'm gonna transition into a little more of a macro micro type of how we got to where we are right now, how these 10 economic storms didn't just all of a sudden wham appear out of nowhere. I'm going to go into a quick detail of where we came from, where we are right now. And also as a call to action of you as an advisor, how you're able to proceed in offering this to your clients. So that'll be at the end, and then we'll open it up to a few Q&As. So just bear with me here for the next probably 10 to 15 minutes so I can give you this background, and then we'll move to the end here. This is probably one of my favorite slides to talk about. And the reason why that is you have a picture here of a credit card, over a piggy bank. Okay. Prior to 1971, okay, you could interchange that credit card for a debit card. And what do I mean here? Well, if we all remember, President Nixon, he got up to the podium and kind of banged his hands like this and said, "I'm going to temporarily suspend the United States gold standard." What did that mean? Well, prior to that, we had to have, in order to print currency, I don't like to say print money because money is a store of value. And ever since we became a fiat currency, meaning backed by nothing, it's no longer a store by value. So when we printed currency in the prior years, we had to back gold and silver in the Federal Reserve banks and essentially the vaults for that. If you remember the bottom of the currency notes, it said in payable in gold and silver. Okay. Well, when we got off that gold standard in 71, we interchanged that debit card having to have a balanced type budget to a credit card, meaning they can print astronomical amount of currency without having to have the gold and silver back it. Well, there's a reason why we're seeing inflation. It's simple economics 101 that we were taught in grade school. But to add fuel to the fire, the Fed balance sheet, we never saw anything like this until the 2008 crash. I called it when everybody's 401k turned it into a 201k. So when we in order to get out of this call it recession or a crash, they had to stimulate the economy. So what they did was over the course of 5+ years during the 2008 crash is they printed $3 trillion in circulation to help stimulate this economy. Well, fast forward, that was unprecedented at that time. Fast forward to COVID in 2020 when we had all massive shutdowns. We don't want to revisit that again, but they just added extreme fuel to the fire. $3 trillion of added currency added to the money supply in 3 months. Okay, that's just it's crazy. And ever since then, we've just continued. Now, like I said, we're adding every 100 days is another $1 trillion into our deficit. Just crazy numbers. So when we look at that, what does that really mean for us? Well, that just means inflation. This isn't going to be anything new here. This is going to continue. And that's why it's important, again, to have this asset class in your back pocket for your clients. But I just printed this slide yesterday. This is the total U.S. national debt of just under $35 trillion. You give it another 100 days, we're going to be, darn close to $36 trillion. But if I point your attention to the bottom right where I circled where it says now, 122%, that's the debt to GDP ratio. So in layman's terms, if I'm bringing in $100,000 in a given year, but my expenses are $122,000 every year, that doesn't add up well. You're not going to last very long as a consumer. Okay, but that is what our government is doing to our debt and to our spending. For every dollar that's being brought in, they're spending 20% more than that. Okay, if we fast forward to some of the predictions of what 2025 looks into, and this is from the USDebtClock.org, which is crazy to me. End of 2025, roughly $50 trillion of national debt. I see that a little far-fetched. We're going to see closer to that $45 trillion number. But that debt to GDP number of being speculated at roughly 190%, this is one of those things that it's just not sustainable. It just doesn't work. Okay. So when I paint this grim picture of where we came from, where we are right now, well, where do we go from here? Well, when you look at gold and silver has an inverse relationship to 3 historical asset classes. And when I say inverse, you don't, when you look at when something plays inverse of one or another, that doesn't mean you want one or the other. That typically means you want both, especially as when you're looking at building a retirement portfolio for your client. We're not trying to speculate and try to hit a home run here. We're trying to be conservative, obviously grow their portfolio, but to make sure that, their dollar-based assets are not debased like they have currently been. And it's going to continue to have debasement. That's why we place a small percentage of their assets into physical gold and silver. So when I say these 3 asset classes, I'll move into these real quickly. 3 asset classes that play inverse to gold and silver. Well, no shocker, our US dollar. The big one is real estate, but the largest one is the stock market. When those 3 things are doing well, physical gold and silver on the seesaw on the other end tend to do poorly. And vice versa. That's why you want participation in both. Okay, so I'll dig into our US dollar real quick here. I call this the devaluation of our dollar. When we look at the creation of the Federal Reserve, over 100 years ago now, 1913, what I found, even a lot of advisors don't understand, is the Federal Reserve is not a government entity; it's a private entity, and they're essentially in control of our currency supply. So when you look at the year 1913, that's when I like to say a dollar used to be worth an actual dollar, okay, a real purchasing power. If we fast forward, I know this one goes to the end of 2019. If we fast forward actually here into 2024, we've lost over 98, actually about 99% of our purchasing power since the creation of the Federal Reserve. Okay, so the layman's example, I've got two for you. I'll bring up this example of a Mustang. 1964, a base model of a Mustang was roughly $2,300. Okay, now if you were to purchase that Mustang, here you are, you have this car. However, if let's just say we were to use those funds into silver at that time and just to try to preserve our purchasing power, that same silver back then would be worth roughly $83,000 today. Well, what does a 2024 base Mustang look like today? Roughly $58,000. I mean, you have a large difference of call it $25,000 of increase. Now, a 1964 Mustang, you can call it collectible, you can call it whatever you want. Most aren't even driving anymore, right? If you were to buy goods and services with your dollar back then compared to where it costs now, I mean, it's a completely different levels of what it needs for currency to purchase what it was years ago. I personally, when I'm sitting in front of my clients, I hold up my silver dollar, and again, call to action at the end is partly how you get yourselves two silver dollars. You can have them in both hands. You can let your clients touch one. You have one. It's something tangible you can have. That's versus signing all these papers like they're used to. It really changes that conversation. But when you're looking at this layman's example, everybody has to buy gasoline, right? And when you look at a silver dollar back in 1950, the value of that silver dollar bought me 10 gallons of gasoline. Okay. Fast forward to 2020 when we had gas, we had major shortages after COVID, all this stuff. That same silver dollar in purchasing power would still buy you 10 gallons of gasoline. Where we are today, on a Wednesday here in 2024, what's the nationwide average price of a gallon of gasoline? Roughly $3.50 per gallon. Well, newsflash, a silver dollar is about $35 per coin. It just makes complete sense. It follows this, near the T, and that's the beauty part of it. If I look into again, you mentioned the U.S. dollar playing an inverse role to this. If I look at real estate, I've got data going all the way back 100 years that when real estate's high, gold and silver's low. When gold and silver's high, real estate's low. But if I give an example of the last, largest crash, call it the 07-08 real estate crash, again, when everybody's 401ks turned into 201ks, you can see in your red lines there that gold obviously appreciated during that time and your real estate crashed. Again, inverse seesaw type mentality. If I compare the equity markets, same thing here. This just happens to be a 20-year chart. Of comparing the Dow Jones versus the gold ETFs at that time. Hey, they've both in the last 20 years have done well. I mean, gold has killed the Dow in comparison to the two. But the reason why I bring this up is if I showed the last 30 years or even the last 10 years, the Dow actually rotates and it has outperformed gold. I show this 20-year to kind of give you an example. Again, we're not trying to substitute one or the other. When an asset class has an inverse role to each other, again, that signals we want to have participation in both. Okay, so again, all of this is looking at this as wealth insurance. When we're looking at a client's portfolio, we're looking at all of our dollar-based assets that we've already done. If you're insurance only, hey, another advisor might be taking care of their AUM, whatever that might be. If you're 65 or above, hey, you're doing that all. But no matter what we're doing and no matter what licensing we have and how we've positioned clients, all of our planning, all of everything that we have done for our clients are all solely based upon the dollar's value. And, whether that's diversified into you name it, right? It's real easy to sell a fixed index annuity right now because insurance rates are high, and you should be. Those are great things to be. Interest rates are extremely high, and you should be bringing this up to your clients. But obviously, from a suitability standpoint, we can't do all 100% of their assets in that. So this is again that other play in here to help offset. In my mind, the biggest thing is inflation right now. So Again, are we seeing returns in gold and silver? Technically, yes. But my question to everybody else when they ask that is, and they ask about, hey, how's my gold and silver doing? And I go, it's doing exactly what it's supposed to. I don't care if gold is at $2,000 an ounce or $10,000 an ounce. It doesn't matter. It's kind of like health insurance. You don't liquidate, you don't sell your gold, you don't sell your silver because it's high. It's just like you don't sell or get rid of your health insurance because you feel good today. It's there in case you need it. Granted, it is a very liquid asset, so it's not like you're tying things up with a large, surrender time, but it's there to forget about, to buy it, forget it, and put it away until we have the next recession and the next crash, which we all see can be coming here. Okay. I'm transitioning to, I'm going to 2 case studies for you of my personal clients. And then I will show you what the plan is of how you can get those silver dollars in your possession so you can show and tell with your clients how you can become educated, how it starts a chain reaction of our office talking with you and to partner with you. And then we'll end it with a Q&A. But looking at these 2 case studies for you, this is kind of an average Joe client for what we look at, roughly $2.6 million in assets. You can see in the middle where we circled 10% of his assets are in physical metal. They didn't start there. This is all non-qualified that the client has physical possession of, that we actually ship the client products. They have it in their own safe. I didn't start there. I want to say this client, because he did not want IRA money for gold and silver, because you cannot take physical possession. It took a little while to free up some liquidity, pay the tax man to get non-qualified. Started, I believe, at a $50,000 allocation, and we just added to that over the next year to get to that 10%. 10% is kind of our base minimum recommendation of metal. It's like that example of a seesaw, which I brought up. If you remember when you were a kid, maybe, you're on the seesaw and you're 50 pounds, you're 7 years old. And obviously it doesn't make sense for a 300-pound grown man to be on the other side of it. It just doesn't work out for the weight balance. The same applies to your portfolio. We shouldn't be looking at a $5,000 case or a $10,000 case, because you have to have enough to make a difference. We get the question a lot is, what is our minimums? Well, minimums shouldn't come up. You need to be saying, hey, this needs to be at minimum 10% of your of your overall portfolio. Here's your portfolio spread out. This is the amount I recommend. Now, it's the old saying, we can lead a horse to water, but we can't make him drink. But in this case, if you leave it up to your client, they go, oh yeah, this $3 million client goes, I've got this 10 grand in my checking account I haven't used or even touched for the last 5 years. Let's put that into it. Well, we want to make sure this is enough to make a difference. We want to make sure it's not a hobby. This is a real asset class to help protect and offset some of the economic storms that are coming. 10% is that base minimum. I typically try to target that 15%. And even personally speaking, I'm probably closer to 20%, but I know this happens to be my industry. So this case, the last case study I can show you, this guy went a little higher. This is a retired airline pilot. Not a whole lot of assets there, but strong pension, strong income because of what he did for his entire life. In this case, probably what you as an advisor see often. A lot of money and qualified. In this case, all of his money was IRA money. So in this case, this was his choice. We recommend 10 to 15% after we share with them, what this actually serves as, what this is going to be an inverse relationship to. And then he goes, you know what? I don't trust the government. I don't trust any of this stuff. I want to do this much. And his portfolio has done extremely well as a result of that. Okay, so there's flexibility. We like to try to do as much non-qualified as possible. Personally speaking, it's because you get possession of it. It's yours. No one knows you have it. It's private. It's liquid. It's like that proverbial cash under your mattress. IRA money, if we're trying to get to that target 15%, not everybody has 15% non-qualified or ready to roll. Well, then we look at a hybrid approach. We get maybe we do 10% of non-qualified and 5% in qualified. So we can be flexible when it comes to that. But again, knowing that it's going to be held for them in a trust custodian as IRS rules allow. Okay. So what have we done here? Well, where are we going? Well, we have a plan. Okay. The plan first is, congratulations, you completed step 1. You watched this webinar. Now, what's plan two? Well, plan two is receive your quick start kit, and I'll explain how you do that. But then after that, it's once you have the education, once you've talked with our marketers in our office and we help train you and get you equipped. I mean, this is as quick as we've had individuals watch this exact webinar, go, wow, I've got a client right now in the back of my mind that has already asked me about this. They go directly to that client and, boom, that transaction happens today. It's that quick. It's that easy. Again, no extra licensing. It's as simple as a generic contract we have, just like you have with other carriers as well. It's that simple. But to receive your quick start kit, here's the caveat. I don't want to lose anybody here. We're not trying to sound like an infomercial and sound, oh, but wait, there's more. We tried to come up with a cost to this kit. And this is the most reasonable number we've come up with to break even on. Remember, is you go to goldensilveradvisors.com and for $200, you're going to be receiving silver dollars in the mail from my team. Okay. So we had to have a cost associated with that because we're actually sending you roughly about $100 worth of coins. In addition to those coins, we provide you on-demand videos. It's a training videos that many different curriculums involved with that. It's powered by Teachable, so it's kind of like your CEs that you're used to. But we give you the platform to have numerous downloads, white papers, client materials. We brand materials to you. We ask for your logo. We ask for all of that stuff. When I mentioned that we're a glorified IMO, but for gold and silver, this is what I'm talking about. So this, when you go to Gold and Silver Advisors with an S, it's plural.com, it starts this chain reaction in my office. Okay. As soon as you do that, my office reach out to you same day. They're going to be calling you and say, hey, we need your logo. We need your this and that. It starts that. We get your address so we can send you those materials hard copy as well, as long as digital, but also we need to get you that silver because it does change that dynamic. It changes that conversation when your client, even if you do a lot of your, appointments virtual, just to holding up your coin, to your camera like this, it changes all the dynamics. So that's where this starts here. So I'll just unpack real quick what this training looks like for you, and then we'll end it here with questions and answers. Section 1, how to bring this up to your clients. We go into detail about that, using a lot of the current events, using those 10 economic storms that I mentioned to you, and you only need to use essentially one of those, which is inflation right now. If it's not you bringing this up, then who? That to me is my biggest trying to have that damsel in distress scenario. If you're not bringing this up to your clients, whether you believe in gold and silver or not, I don't care. But your clients are going to be searching for this. And we want to make sure they're not going to the unregulated, unlicensed sources it's notorious. You can name XYZ company. I can tell you what their margins are. And the average out there is 35 to 40%. It's crazy. So if it's not you bringing it up to your client, then who is? And that's the biggest thing here. But when we get into the nuts and bolts of why, section 2 is why we use what we use. This isn't just pick something out of a hat. This is a time-tested thing of keeping it simple. You don't have to be, this professor in gold and silver. It's just simple economics. Why we use physical versus paper. I made mention to that, the Titanic example. Why we don't use bars? Well, because they're Costco sells bars. They sell over $200 million per month in bars. However, they don't buy them back. They don't buy them back because they don't want them back. They're very illiquid. Not saying Costco's doing this because they're not, but there's a large counterfeit space in the bar market because they're very easy to fake and reproduce. Why we don't use collectibles? We're not looking at this as a hobby. We're not also looking at this as this shiny high-end, that you have to be an expert in. We use just the general circulated American coins that carry very little premium whatsoever, especially right now. And it's a private asset when clients buy and also when they sell. And then we also say, hey, we give you that training of what's better, gold or silver. And right now we want both. However, silver is just a screaming buy right now. It's the only commodity that's still under its 1980s peak. Every other commodity since 1980 is up on average over 350%, and silver is the only one that's still down from there. Absolute no-brainer from where we are right now. Section 3, logistics and facts, our typical order process, non-qualified, it's refreshing. If you're older than I am and you remember annuities used to be 3 paragraphs long, you could write it on a napkin. That's what this is like for non-qualified. Literally 1 page. That's all this is. We ship it directly to the client based upon the address on the order form. We go through how qualified works, but some of this logistics and facts it's your mindset. It's how we're looking at this as this isn't a speculative play. I don't care if it goes up 20% or down 20%. It's going to have that seesaw mentality. So then if you explain this to your clients correctly, then you don't have those calls when silver and gold are shooting up through the moon of, oh, what's my value at? Or you see the stock market crash and the client goes, oh no, how are we doing? Well, that's why you have all of this in place for you, because when we have those big swings, we have that inverse relationship to balance everything out. 2008, when we had that big crash, a 10% allocation in gold and silver, that literally the reason why we have a 10% allocation is that clients broke even. The average market loss was 45%, but gold and silver at a 10% weight had enough to break even during their time. That's why I recommend 15%. Okay. In addition, one thing I like to say is we like to have client to advisor conference calls. I've got my staff that travels all over the country that does in-person webinar, in-person live educational events for advisors and their clients that we actually present at. We don't charge for that. You just need to invite your clients to the room. We also do that, virtual like we do this. So utilize us as this IMO for gold and silver, and that's what we're here for. Okay. Lastly here, section 4, marketing. I mentioned this a little bit. We give you scripts of how to bring this up to your clients, how to invite these clients to workshops, in person, virtual, you name it. We've got doodle videos branded to you, ebooks. I mean, the list goes on. So finishing up here again, goldandsilveradvisors.com. Regardless if you go there or not, you will be receiving a call from my team today or tomorrow. They're going to be just calling to introduce themselves to you, get your information, and partner with you of how you can be advising your clients for this. But Emmy, I'm going to leave this to you now for Q&As, so we can all move on with our day here. Okay.
Excellent. Thank you so much, Ryan.
Yeah.
We do have one question so far. How is the physical precious metal shipped? Do you guys buy back the coins? Is it spot price?
Sure. Yeah. So unpacking that right there, how is it shipped? It's all FedEx Express. Big yellow stickers that say signature required on there. It's all insured by our insurance carriers. Knock on wood, we haven't lost a package in over 6 years. We ship millions of dollars on a monthly basis. So we as far as distribution is concerned, it's very, very discreet, and it's very easy for your clients to take physical possession of that. As far as, pricing and spot price related works, to get kind of this elephant in the room out of it, spot price is what your ETF is going to go off of. What physical metal has, and the beauty of it, it has the organic free trade of it, of simple supply and demand. Right now, it actually is a fantastic time because the consumer sentiment is actually extremely low right now. So when you have an extremely low sentiment, what that does is just an increased supply of inventory that's inundated into the entire markets, which then those premiums that used to be much higher have come much closer to spot price. So give you an example right now, a silver dollar, you're probably $34, $35 per coin on that. That includes everything, advisor compensation, shipped directly to the client. That spot price on silver today is roughly 32. There were times, just even last year, when supply was a major issue, and we have to keep raising our premiums in order to have enough inventory come through our door so we can send out to our 1,500 advisors that are marketing this. I mean, there are times last year that the spot price was 25, and that coin hit as high as 42. So you can see that there's just a fluid trade of supply and demand, and that's what this organic thing has compared to the ETF market is very important, and we go into that into greater detail inside of our advisor training.
Excellent. Do you work with any other precious metals like platinum, industrial metals, or copper?
We don't. We can help. We can help liquidate, getting out of platinum, palladium, etc. Copper, it's just super bulky as far as the price per ounce is concerned. I always like to say gold, silver, and lead is our specialty, is what the client demographic that we work with. But as far as gold and silver, when you look at it from the monetary hedge that it is, platinum and palladium do not have those dynamics that are involved. They're more of a speculative play based upon how industrial booms or busts are occurring. So we don't typically, just like we don't recommend or even get into precious gems like diamonds, very speculative, high premiums and tough to get out of. And it's the same with platinum and palladium.
Excellent. How do you determine the percent allocated in gold and the percent allocated in silver? Is there a process that helps determine this?
I like that question. As far as that process, just like you want participation in those other inverse assets that I mentioned, you want participation in both gold and silver. The biggest myth out there is somebody goes, where in the world am I going to put all this silver? Well, I can put $100,000 silver in two small shoe boxes. $100,000 of gold can fit in the palm of my hand. Okay, so when we look at our average transaction here in the last trailing 12 months, it's approximately about $160,000 per case. Okay, again, that 10 to 15% level. When we look at that 10 to 15% level, we like right now as a consumer, silver by far is a better bang for your buck, but you want exposure to gold as well. If it's just an average client that, I like to say, I'm not going to allocate a whole lot of silver to 90-year-old Mrs. Jones that's widowed because, having her lift a 30-pound box just isn't reasonable. That's where we do majority gold. But right now in this marketplace, a 70 or 80% silver and a 20 to 30% gold is a good idea right now. But that's where also, and things are going to interchange. That's where partnering with us, working with my team, and we'll be able to help you talk with authority in front of your clients to give them a quick education.
Excellent. And then what is the process to sell the product if the customer is interested?
Yep. So we have our advisor agent contract. I haven't changed that contract in over 15 years. It just spells out, hey, they're your clients. They're not ours. The only time my office contacts your client is the day before the product actually ships. So they're going to call and say, typically it's a friendly gal behind the scenes from our Minnesota office, just confirming an address to make sure it's right, because we want to make sure things didn't get transposed incorrectly, and to say, hey, it's going to be shipped. But if a client's not going to be available, or maybe they're going out of town, we will obviously hold on to the metal for your client until they get back or until they're ready to take possession. But as far as the process is concerned, it's first of all, it's partnering with us, getting the education of how to properly position this as a mindset for your client. This isn't speculative. This is an inverse hedge, and it needs to be a longer term hold just to have that stability. Otherwise, don't even do it. But the process works as simple as when a client's ready, whether that's a conference call with us, virtual call with us, and video with you and your client, or you're just ready to rock star it yourself. It's a one-page order form. Once you get the education from us, knowing that, hey, for silver, it's just the silver dollars. For gold, it's just these smaller U.S. gold coins. That's it. That's as simple as it just comes down to. It's like moving a block of money, like a fixed index annuity. You're moving a chunk into precious metals. Maybe 80% of that silver. It's as simple as that, and it's really easy to moving forward.
Excellent. A couple more here. I'm pretty sure you've already touched on this, but just to reiterate, any extra licensing required?
Nope. This is not a security. This is not above and beyond anything that you're already doing. We are licensed. We're regulated and bonded. We work with numerous RIAs, FMOs as well, like NFI. This is what is fantastic about this is this should be an addition to what you're already doing with your insurance products, and this obviously should increase your insurance product sales because you're able to market to a newer clientele. But no extra licensing is required. If you are 65 or above, this turns into an outside business activity. If you're an RIA or find yourself in that category, it's just as simple as adjusting your ADV Part 4 and saying that you facilitate transactions with National Gold Consultants. It's as simple as that.
Awesome. Well, that looks like we are out of time today, folks. Thank you so much for your time today, Ryan. We really appreciate it. This was a great presentation. Remember, folks, with partners like NFI Solutions and National Gold Consultants, you too can help your clients reach financial success. Thank you so much, everybody, for attending today. If you have any further questions or need guidance, don't hesitate to reach out to NFI Solutions at 952-887-1239. Stay empowered, stay informed, and may your journey be filled with prosperity. Thank you for joining us. Till next time, take care. Thanks, Ryan.
Yeah, thanks, guys. Take care.
Bye.